Hey everyone, it's Ryan with Stock Investing and Trading 101. Today I made a video how I made over $400 pretty much shorting the market using some technical patterns and using technical analysis. Today we're going to talk about 3 patterns using technical analysis that can lead you to very consistent results. These are patterns that happen, regularly, many times during the month, on many different stocks, and usually the outcome is the same pretty much every time. So let's get right into it. Today we're going to talk about bearish divergences using RSI, using volume, and using the Bollinger Bands. So up on the screen right now, I have a chart of the S&P 500. This is a 1-year chart. Each one of these little candles represents 1 day. And first, let's start with the volume. Now, volume is a very, very powerful and useful indicator. And one of the ways to use volume is to see if the market is making higher highs on lower volume. If the market is making higher highs or going higher and the volume is lower, this is a very bearish sign. This is a sign that the market is possibly reaching the highs. And if you look here, we have the volume on the bottom in pink. We've had declining volume now for the past 4 days and really pretty much the past 10 days. If you look back here where we are now, this big volume line right here, we've had declining volume ever since. Now, if you look at the top where we have our chart here, you'll notice that the same line where we had the high volume, we've been going higher and higher and higher and higher on declining volume. So this is the first technical pattern and style we're going to look at. This is a bearish divergence using volume. We're making higher highs on lower volume. This is one thing that I noticed that led to my short position. Next, we're going to talk about RSI bearish divergence. So looking at the RSI, which is this middle indicator here, right above volume and right below the actual chart itself, I'm going to remove volume just to make it easier. So now we're left with the chart and the RSI. So looking at them together, you'll notice once again the market was continuing to go up, and yesterday and even possibly today made new all-time highs. Normally what you'd want to see is for the RSI to be also making highs. And this isn't happening because we have, a higher RSI right here, as well as numerous other places. And so normally you'd want to see the RSI continuing to go up with the market momentum. So like right here, when the market has an all-time high candle, looking at the chart, the market is at an all-time high right here. But the RSI, the purple line right here that's next to the RSI, is not at a new high point. This is what's called a bearish divergence on the RSI. And this is also very powerful. And not only are these very powerful by themselves, but when you put all of these things together to, form a position, and you have multiple of these going on at once, I'd say 90% of the time it leads to the result that you're expecting. For example, if we have a bearish divergence on RSI, bearish volume, we have the market making higher highs on lower volume. That's 2 things. And now if you add in the third, which is the Bollinger Bands break. So the Bollinger Bands is this set of 3 red lines here. So we have our candlestick chart. I'll take the Bollinger Bands off just so you can see what it looks like without them. So this is without the Bollinger Bands. It's just a regular candlestick chart. You have your green and your red candles. Once you add the Bollinger Bands, you include these 3 red lines. These 3 red lines are pretty much a set of moving averages that pretty much tells you the expected range. It's pretty much the range that this normally trades in. When it goes above the top band or below the bottom band, it's moving more it's moving more than it should. And so when it breaks above the top Bollinger Band, like it does right here about 2 days ago, normally what happens is when a stock breaks above the top band or below the bottom band, it snaps back into the range very quickly. So if you see a stock on a longer term chart, such as the 1 year chart, breaking above the top Bollinger Band, normally it's a decent time to short. And if it's below the bottom Bollinger Band, such as it was way back here, you see here it broke below for a couple of days. You see how it broke below and it pretty much snapped right back up within a few days. This tends to happen pretty often. So, and if you go back on a history of pretty much any stock, you can use this on any stock. It doesn't have to be the S&P 500. Any stock, you'll find the same results. You'll notice right here, we break above the top Bollinger Band, and it snaps back pretty fierce, and it comes down literally the next day. So using these three indicators together can really help make you a lot of money. So once again, we have the Bollinger Bands breaking above the top Bollinger Band. We have the volume making lower volume, but the market is making higher highs. And lastly, we have the RSI. We have a bearish divergence on the RSI where the market is at new highs and the RSI is pretty much not at new highs, and it's actually significantly lower than it was, right here, and pretty much, it's been over a month now, it looks like, since it's made new highs on the RSI, which means the momentum is kind of ending. The trend possibly could be starting to end. So these are just three indicators you can use. They're very powerful. When you put them together, it's even more powerful. If you have all of these three things happening on a stock at the same time, chances are it's a pretty decent time to think about, taking profit or, possibly shorting, depending on your experience level. And, they're just very consistent patterns that happen, almost every day on one stock or another. So I just kind of want to show you guys some of my, why I take the trades. I shorted the market and pretty much caught this big red candle that we started today and made, $400 off this move so far. And it could continue to go down, but I just wanted to show you guys why I took the trade, and hopefully you guys learned something and can use this yourself. This strategy here and these indicators, once again, are extremely consistent and extremely powerful indicators. If you see any of these, just watch. Don't necessarily trade on it, but just watch and see what happens. And after you see the same thing happen, 50, 100, 1,000 times, you'll start to get confidence as to, okay, I see the S&P breaking above the top Bollinger Band, I'm going to grab some puts. Or I see the S&P breaking below the bottom Bollinger Band, it's time to buy. And you'll learn consistency that way. So just wanted to teach you guys something new today, do a little bit of technical analysis. So I appreciate you guys watching. As always, don't forget to smash that like button, subscribe to the channel, and we'll talk to you guys soon.